Welcome back to Ripple Insider, everybody. Today we have a massive update shaking the entire crypto market. And trust me, this story is creating serious debate across the XRP community. We are talking about Ripple CTO David Schwartz directly rejecting the idea of treating XRP meme coins as real investments. And the reaction online has been explosive. At the same time, Ethereum is facing heavy pressure as analysts point toward rising oil prices and macroeconomic fears, while Bitcoin just triggered a brutal liquidation event that wiped out more than $660 million from the market in a matter of hours. On top of that, XRP volatility is heating up again. Dogecoin keeps showing surprising strength, and many traders are now asking one big question: can Toncoin actually hold above the critical $2 level? There is a lot happening today, and the market is moving fast, so stay locked in because this update could change how many investors look at the crypto market heading into the next major cycle. So let's begin with the biggest controversy surrounding XRP right now, because David Schwartz has finally addressed the growing obsession with XRP meme coins, and his comments are already dividing the community. For those who may not know, Schwartz is one of the most respected figures in the XRP ecosystem. Whenever he posts something online, the XRP army immediately starts analyzing every word, every action, and even every wallet interaction connected to him. That exact situation exploded recently after a strange event involving a meme coin called Fuzzy. Earlier this month, Schwartz opened a technical trust line connected to the token, and that single move was enough to send parts of the XRP community into a frenzy. Investors immediately started building theories that the Ripple CTO was secretly supporting the project, or possibly connected to it behind the scenes. Social media exploded with speculation, and some traders rushed into the token, believing this was some hidden signal from Ripple insiders. What made the story even more intense was the name itself. The Fuzzy token references the historic Fuzzy Bear wallet, which longtime XRP holders remember from the early days of the XRP ledger back in 2013. That wallet became legendary because of an old joke order offering 1 XRP in exchange for 1 Bitcoin. And over time, it turned into a famous piece of XRP history. So when traders saw Schwartz interacting with something connected to that name, they immediately assumed there had to be deeper meaning behind it. But according to Schwartz himself, that interpretation was completely wrong. He pushed back hard against the idea that technical wallet activity should be viewed as investment endorsement. In fact, he described the entire situation as distasteful, making it clear that people are reading far too much into simple blockchain interactions. His comments were direct, blunt, and honestly surprising to many XRP holders who were convinced there was some secret signal hidden beneath the surface. Now, this situation reveals something very important about the current state of crypto markets, especially inside passionate communities like XRP. Investors today are desperate for clues, and many people are looking for hidden meaning in every transaction, every social media post, and every blockchain movement. We have entered an era where speculation moves faster than facts, and meme coins are benefiting massively from that environment. Schwartz seems deeply uncomfortable with that trend. From his perspective, opening a trust line does not mean someone supports a project financially or philosophically. It can simply be a technical interaction, a test, or even curiosity. But many retail investors no longer see it that way. They are hunting for signs that insiders are secretly backing the next explosive token, and that creates dangerous, emotional investing behavior. The Ripple CTO appears worried that inexperienced investors are attaching real financial expectations to meaningless signals, and his frustration is becoming more visible publicly. What is especially interesting is how quickly the XRP community can move once a narrative gains momentum. Within hours of the Fuzzy situation spreading online, social media accounts started posting theories claiming Schwartz was secretly promoting XRP meme ecosystems. Some influencers even suggested this could be the beginning of a major meme coin expansion on the XRP ledger itself. That created excitement, fear of missing out, and speculative buying pressure almost instantly. But Schwartz shutting those theories down may actually protect investors from making emotional decisions based on hype instead of fundamentals. The crypto market already has enough volatility without communities turning ordinary wallet activity into conspiracy theories. And honestly, this entire event shows just how emotionally charged the XRP ecosystem has become recently, as investors search for the next catalyst capable of pushing XRP into a major breakout phase. Meanwhile, while XRP holders debate meme coins and trust lines, Ethereum investors are dealing with a completely different problem right now. Ethereum has been under pressure lately, and according to several analysts, one unexpected factor may be contributing to the weakness: oil prices. Yes, energy markets are suddenly becoming part of the crypto conversation again. Analysts connected to Fundstrat believe rising oil prices are creating macroeconomic stress that is hurting risk assets, including cryptocurrencies like Ethereum. The correlation has surprised many traders because crypto enthusiasts usually focus on blockchain developments, regulations, and ETF news, not oil markets. But global financial systems are deeply connected, and when energy costs rise aggressively, investors often become more defensive overall. That can reduce appetite for speculative assets like altcoins, especially Ethereum, which has already been struggling to maintain strong momentum against Bitcoin in recent weeks. Despite the weakness, Tom Lee remains incredibly bullish on Ethereum long-term. Lee, who leads ETH treasury giant BitMine, described the current market conditions as nothing more than short-term tactical noise. According to him, the core macro drivers supporting Ethereum remain completely intact. He believes this pullback is temporary, and that Ethereum could recover strongly once energy markets stabilize. That perspective matters because many traders right now are panicking over Ethereum's recent performance compared to Bitcoin. The ETH-BTC ratio recently dropped to around 0.027, marking one of the lowest levels seen since mid-July. That decline has intensified fears that Ethereum may be losing dominance inside the broader crypto market. But long-term bulls argue that temporary underperformance does not erase Ethereum's role in decentralized finance, tokenization, smart contracts, and institutional blockchain adoption. Still, there is no denying the pressure Ethereum holders are feeling emotionally. Crypto investors tend to become impatient very quickly, especially during periods where Bitcoin outperforms everything else. Many traders expected Ethereum to lead the altcoin market this year, yet instead we have seen repeated periods where ETH struggles to build sustained momentum. That has frustrated many retail holders who entered the market expecting rapid gains. But historically, Ethereum has gone through multiple phases where sentiment collapsed before major recoveries eventually arrived. Experienced investors understand that crypto markets move in cycles, and short-term weakness does not necessarily destroy long-term bullish structure. The real question now is whether Ethereum can regain strength before broader macroeconomic fears intensify even further across global markets. Now let's talk about the brutal event that shocked the entire crypto space today: the massive Bitcoin-driven liquidation wipeout that erased over $660 million from traders in just 24 hours. The most devastating part happened within an incredibly short 12-hour window, where volatility accelerated rapidly and traders were caught completely off guard. Long positions were destroyed at an astonishing rate. Around $569 million in bullish positions were liquidated, compared to only around $48 million in shorts during that key period. That imbalance tells you everything you need to know about market sentiment heading into the crash. Traders were leaning heavily bullish, expecting prices to continue climbing. But instead, the market reversed aggressively and triggered a chain reaction of forced liquidations across exchanges. Over the full 24-hour period, the total market wipeout reached approximately $660 million. Bulls absorbed the overwhelming majority of the damage, suffering around $589 million in long liquidations. By comparison, short sellers lost only around $71 million. That kind of imbalance usually signals excessive optimism before a sharp correction. When too many traders crowd into leveraged long positions, the market becomes vulnerable to sudden downside moves that trigger cascading liquidations. Once those liquidations begin, selling pressure accelerates automatically because exchanges forcibly close losing positions. That creates panic, volatility, and even more downward momentum. We have seen this pattern many times throughout crypto history, and it remains one of the most dangerous aspects of leveraged trading. What makes this situation particularly important is the psychological impact it creates across the market. Liquidation events of this size do not just erase money. They destroy confidence temporarily. Traders who were feeling unstoppable yesterday suddenly become fearful overnight. Social media sentiment flips dramatically, and people start questioning whether a larger correction is beginning. But experienced investors understand that extreme volatility has always been part of crypto. Massive shakeouts often occur before markets stabilize and continue trending. The challenge is surviving emotionally during those periods without making impulsive decisions driven by fear or greed. Right now, the crypto market is testing investor discipline once again, and not everyone is handling the pressure well. Now, shifting back toward XRP specifically, analysts are warning that XRP volatility could increase sharply in the coming days. The asset has been moving inside a tense range recently, but traders believe a breakout may be approaching as market pressure builds. Some analysts remain optimistic because XRP continues maintaining strong community support and institutional interest despite broader market uncertainty. Others warn that volatility cuts both ways, meaning sudden downside spikes are also possible if overall crypto weakness continues. What is clear is that XRP traders are watching every development closely, especially after the recent David Schwartz controversy added even more attention to the ecosystem. When emotions run high, volatility usually follows soon after. At the same time, Dogecoin continues surprising traders with ongoing strength during a period where many altcoins are struggling. The meme coin market remains extremely unpredictable, but Doge has managed to maintain upward momentum thanks to strong community engagement and speculative interest. Some traders believe Dogecoin benefits whenever broader market fear begins fading because investors start chasing higher risk opportunities again. Others argue that meme coin culture itself has become deeply embedded inside crypto investing psychology. Regardless of the reason, Doge continues attracting attention, and traders are closely watching whether the current uptrend can continue if Bitcoin stabilizes after the recent liquidation chaos. Then we have Toncoin, which is facing one of the most important technical tests in its recent history. Analysts are now focused heavily on the $2 level because maintaining support above that area could determine whether Ton remains bullish or begins slipping into deeper weakness. Toncoin has gained attention due to its connection with the Telegram ecosystem and growing interest in blockchain-based communication platforms. But like every crypto asset, momentum can disappear quickly if key support levels fail. Investors are now debating whether Toncoin has enough buying pressure left to defend critical price zones while the broader market remains unstable. The next few trading sessions could become extremely important for Ton holders. One thing becoming increasingly obvious across the entire crypto market is that emotions are driving price action more aggressively than fundamentals right now. We are seeing fear, excitement, conspiracy theories, and leverage all collide at the same time. XRP holders are debating meme coins and hidden signals from Ripple executives. Ethereum investors are worrying about oil prices and macroeconomic pressure. Bitcoin traders are recovering from one of the most painful liquidation events in recent weeks. Dogecoin continues benefiting from pure speculative momentum, while Toncoin fights to maintain key support. This is the type of environment where narratives shift quickly, and traders need to stay extremely disciplined because emotional reactions can become very expensive. And honestly, David Schwartz's comments may end up becoming one of the most important lessons from today's market update. His rejection of treating XRP meme coins like serious investments highlights a growing problem throughout crypto culture. Too many investors are relying on rumors, speculation, and social media theories instead of doing proper research. Crypto remains one of the fastest-moving industries in the world, but speed also creates confusion. A simple trust line interaction turned into a massive conspiracy narrative almost instantly. That tells you how emotional and reactive the market has become. Schwartz appears determined to separate technical blockchain activity from investment endorsement, and whether people agree with him or not, his comments have definitely forced the XRP community into a deeper conversation about speculation versus reality. As we move forward, the next few weeks could become critical for the entire crypto market. If energy prices calm down and macroeconomic pressure eases, Ethereum bulls believe altcoins could regain momentum quickly. If Bitcoin stabilizes after the liquidation event, investor confidence may return faster than expected. XRP volatility could create major trading opportunities, but it could also increase risk dramatically for emotional traders chasing hype. And of course, meme coin speculation will likely continue dominating social media conversations no matter what happens. That is simply the reality of modern crypto markets right now. So overall, today's market update shows us one clear thing. Crypto remains one of the most emotionally driven financial spaces on Earth. One wallet interaction can ignite conspiracy theories. One macroeconomic shift can pressure Ethereum. One liquidation cascade can erase hundreds of millions in hours. Yet despite all the chaos, investors continue showing up every single day because they believe the long-term future of blockchain technology remains incredibly powerful. Whether you are bullish, bearish, or simply watching from the sidelines, these moments remind us why crypto markets attract so much global attention. The volatility is intense, the emotions are extreme, and the narratives change constantly. But that unpredictability is exactly what keeps millions of investors locked into this market every single day.